What's going on, everyone? Trade recap time. This one is for Wednesday, September 24th, and this was a good one. A reason why I want to do this trade recap is also because, as you know, I'm constantly trying to fine-tune what I'm doing here, right? And I'm constantly going back, looking at videos, figuring things out. Like I'm obsessed with studying, looking at data and all that. And, one of the biggest, and I've said this many times, you've heard me say this many times, but one of the biggest reasons I like trading this style is because it gives me the why things are happening. I'm not blind when I'm looking at the market. I'm not just looking for specific patterns. I know the psychology behind the market, and that's what price action actually is. And as long as there's not other factors, like Trump speaking or something going on, you can pretty much know what the markets should do, okay? Always remember that. Nothing's guaranteed. So I want to start on this daily chart here because the daily chart gave me a lot of insight. And this past weekend, if you're in my Discord, I mentioned it in my Discord, that I spent a lot of time going back and trying to fine-tune some things. And there was some nuggets I picked up over the weekend. And what you're going to see on this video is how, I really correlate a top-down analysis. And that's one of the biggest struggles I see with a lot of people, is how do I properly do a top-down analysis? How do I know the overall bias of the market, the underlying narrative, all that? How do I know that? And that was a big thing with me too, myself, trying to figure out, like on the daily chart, like what's going on? What's the underlying narrative? How do you do a top-down analysis the correct way? And, I've really been focused on trying to perfect that. Not perfect that, but really get it down to where I can, because if the underlying market conditions are proving to be bullish, like the market's going to keep going up, right? And your trades are aligned with that underlying market condition and you're taking longs and that market's bullish, you're going to have a higher probability. Doesn't mean you're not going, like you can't take a short because obviously the market has to pull back. But you're just going to give yourself better opportunities. And also what I'm going to show you in this video is the power of three. Okay. Many of you know that power of three. Okay. And then you have also accumulation, manipulation, distribution, right? Like this happens constantly. But the power of three, remember, every single candlestick, right? Every candlestick, if it's an up-close bar, you're going to have an open, you're going to have a low, right? You're going to have a high, and you're going to have a close. Every bearish, same thing. You're going to have an open, high, low, close. That's the makeup of a candlestick. I know probably a lot of you watching this are going to know that, but you got to think, if that's the makeup of a candlestick, and if you think price that day is going to be bullish, what should you watch out for? Well, you should watch an open, and you should see at some point a low, right? And then at some point, you should see price go up to make its high and then have a close somewhere. Like that's what you should see. So if you identify that, if you can, that's why I believe it's very important, why I've always wanted to know what the underlying narrative is. Because and it's hard, right? Because it's like the daily chart here. It's a full day. The price can range a lot. It's going to constantly be going, up, down, right? But if you can anticipate correctly each daily candle, if it's going to close up or down, then you can have a pretty good idea where you are in terms of an open, high, low, and close, depending on if it's bullish or bearish. So let me put that together for you real quick, okay? So we've been just going up, right? This is the daily chart. We've been just making our way up, 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 up. So, and just like the last few days here, up candle, up candle, up candle, making new all-time highs. But what do we know? It's not going to just go up every single day forever. Eventually it has to pull back. It has to come down at some point. So here we go. How do you know when that's going to happen? Well, it's not always going to be there, but let's check this out. We had a fair value gap here, right? There's a daily fair value gap. And then we had this volume imbalance right here. If you've been following me, you've known I've been showing both of these over and over. Okay? I've been anticipating these. Let me change it here. This volume imbalance. I'll just abbreviate that for now. Okay, so I've been anticipating this some point. Now, what did we do yesterday? This is the Wednesday candle, okay? So this is Tuesday. All right? So Tuesday, we had closed down. Okay? So what did we do here? We created a swing high. It's close. These are really close. This high right here is really close to there, but this high is higher. So we created a swing high. So now I'm going to look, do we have a swing low? Yes. Okay. Now I have a daily range. I have a range, which is going to be between this high and this low. Okay? Because until we have that, until we create a swing high up here, I have to anticipate price to just keep going up until we create this swing high. So what does that mean? Well, what do you do if you have a down close candle? How do you know? Well, you don't. I'm going to keep anticipating up, up. And even this day, yesterday, I anticipated up. But we failed to take the high, right? There was some Trump speaking, Fed Powell speaking. There was things. I ended up not taking. Actually, I did take a trade, but it was a break even. So it was a long trade I took. It failed to displace higher twice. So I moved to break even. I got out. So I ended up getting a break even day. So on days where you're anticipating price higher, 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 when you do get a down close day, you're either going to get a break even, no trade, okay, or a losing day. Typically, okay, which is fine. Because if you have a winner, 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 one of these options, three, here, winner, 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 okay, one of these three here, okay, it's not going to be so bad. So now that we have this swing, we have this range, because I'm always anticipating when are we going to attack that, when are we going to attack that. And then there's some more. We still have another daily fair value gap here, have another little volume imbalance. There's still more things below this swing. I'm not convinced yet we're going to get down there unless we create an inversion here or cleanly trade through. Then I can anticipate coming down somewhere into here, maybe, in this wick somewhere. So now let's look at this. So if you've been watching some of ICT's current videos, you'll see him talking about the premium wicks and all that. So I have been monitoring that as well. I mentioned that on my last video. Okay, so here we still have this premium wick. So let's go ahead and let's just mark it there. Okay, we're just going to mark it there. But before I do that, let's hold on. Before I do that, let me move it. So there we go. So I can show you this because this is more important, right? This is that range I was talking about. Now let's show you this range. Let's measure it. We got the high and the low. That swing high, this swing low. We're going to measure equilibrium, the 50% mark of this range. What do you have here? We have the 50% mark is this purple line right here. Where does it go? Right at this daily fair value gap. Look what price did. Went right to it. So we know when you have this range, this is the discount, right? Below the 50% all the way to the low. That's the discount. Above the 50% to that swing high is a premium. So if we are pulling back, I want to see, are we going to trade into a discount and then continue up? Or are we going to trade here, create this inversion, and continue down to some more imbalances or something like that and continue to be bearish? However, if the market is going to continue to be bullish, I'm anticipating price to come right into here, maybe rebalance this, and then this is the area I'll wait to see if we continue up and go up. Right? And we do have that other fair value gap here, so maybe it overshoots it, it hits this fair value gap, right, in the discount, and then continue up. We'll see. We don't know that part yet, right? But on this day, I have my high and my low marked here, okay, from the previous day. So let me go ahead and throw that up there so we can see the previous day high and low right there, okay? And so if I am anticipating, so now I'm like, okay, we do have this swing, we do have this range, and right in the middle of it here, we have a daily fair value gap. That's a prime spot for it to pull back to, right here, right in this area. So I'm anticipating lower prices from the daily chart here because we just had this daily candle close down. And if it's going to continue down, why? That's why. We have that range, we have equilibrium, and we have a fair value gap right in the middle. That's why. All right, so now we're in the lower half of this. What am I expecting on the daily now? Pushed up. If you measure the previous day range, here's the midpoint. This is going to be a premium of the previous day range. This is the discount. If you want to bring price lower, you need to run price up into a premium, right? Sell high so you can go lower. That's what you have to do. So I'm looking at that, okay? Of course, obviously this hasn't happened yet. So when we drop down time frames, we're going to see if and what lines up with this theory now. All right, so let's drop time frames and let's see, does anything line up with this theory? All right, I'm going to go to the 4 hour because I always drop down to the 4 hour first from the daily. And let's back up here. Let me throw on the replay so we can show you exactly where we were. I'm going to go to the 6 a.m. because, 6 a.m. because this is what it looked like. This was fluctuating, oscillating up and down. This is kind of what it looked like here. So immediately on the 4 hour chart, what do I notice? I mean, it's right there. This big 4 hour fair value gap. Boom. Right there. But if you know and you've followed me and you've seen me trade and all that, I'm looking because we don't have a market structure shift on the daily chart. So I'm not bearish. I'm just looking for a pullback. That's one big thing on that daily chart. On the 4 hour, do we have a market structure shift? I mean, you got some lows right here. I'm not really calling that a market structure shift, okay? I wanted to take this low for a market structure shift. So we see it came down right here. Did not make a lower low. So I'm looking at it as there's not a market structure shift, but what is the first sign of a potential market structure shift that I always say? The first signal for potential market structure shift is an inversion, okay? So I noticed that right away as well. I mark out, we have this fair value gap, but also we have this inversion, big 4 hour inversion right here. Okay. So we came up, made those all-time highs, did all that, dropped down, created this inversion, leaving a brand new fair value gap. So immediately I'm like, that could be bearish. Does that align with that daily analysis that I just had? Yes, that aligns. So what I'm looking at here is I'm like, okay, the market hasn't opened. Here's the midpoint of yesterday's range. So what could happen is this could push up into here somewhere. It already pushed up into the premium right there because it went above it a little bit. It could rebalance this and drop and have a market structure shift there, and then continue down. Or that might be all it needs to go right up in here. And as soon as we open, maybe if there's a little small pool of buy-side liquidity, maybe it just does a little pop up and drop. But that might be all it needs right there. So, all right, I got that noted. Now let's drop down another time frame and see if anything aligns. The 1 hour. Okay. Let's select bar and back up a little more again. Actually, I'm going to have to fast forward, actually. Oops. Let's go to... We'll go to 9 a.m. here. We'll go right there. Okay. So now let's zoom in. Immediately, it's kind of the same thing, right? We have some inversions here, right? Inversions. We had this small fair value gap, but I'm like, okay, this is pretty much a market structure shift. Like, it displaced hard, left a fair value gap, came back up into it, had these lows, displaced again hard. This is a shift in structure. Okay, yeah, we haven't taken these lows, but this is a pretty good indicator that we may be heading down. So I see this big imbalance, this big fair value gap, okay, but we already have a 4 hour one there, so I don't really have to worry about marking this one because we already have a 4 hour. I just take a mental note. Okay, we have a 1 hour one there as well. So same thing. We could be pulling up into here and getting ready to drop. Do we pull up here, rebalance this 1 hour? Maybe, but I'm not expecting too much of a bullish move up before a drop, okay? Now, we do have a couple little 1 hour gaps in here. I was not worried about those one bit. Not one bit. I said the daily looks bearish. 4 hour, potentially bearish. Now this 1 hour, overall, looking bearish. So I'm not worried about these little gaps. If we do what I'm thinking, we're just going to go straight through them. I'm not worried about them at all. So now I ask myself, okay, I got 3 higher time frames aligning together, basically. All right, so now let's drop down another time frame. Let's go down to the 15-minute. This is where the magic happens. Okay. We got 7:45. Let's here. 9 a.m. That's fine. 9 a.m. right there. Okay. So here we had the London low. I believe London low was right here. Okay. We had Asian low right here. It's okay. We already took the London high and Asian high. We had these lows, Asia low, London low, and then if you look down here, it's like, okay, there's a bit of sell side liquidity, previous day low. Now, let me turn back on this one with the wick, premium wick, okay? Because that's important for my trade. So now I'm looking at this and I'm like, okay, we do have, here's the pre-market high right here. And there's a little bit of, you could say buy side liquidity there right here because you have the pre-market high right there and you have relative equal highs. So as soon as I look at this, I'm like, okay. The 15-minute here, same thing, right? We shifted down, left this fair value gap, traded up into it, kept going, took all these lows, and just really dropped. So we may be trading back up into here somewhere. Okay, into this fair value gap somewhere. One of these, which we already have. We're already up here. And we traded all the way back up to it. So, okay, so I really don't need to look much further than that. If anything, I'm looking at, all right, maybe when we open, where can we, if we do have a pop-up, where could it be? So I want to note the imbalances. Okay, we have this little 15-minute fair value gap right here. We have this 15-minute fair value gap right there. And then on top of that, we have this potential buy side liquidity right there. Okay. So I'm thinking to myself, all right, we're either going to pop up and hit this and go down, or we're going to pop up into here and go down, or we could pop up and run this and then go down. That's all I'm looking for. That's all I'm looking for this morning. And basically, what I'm looking at, so, all right. So a good question came up in the Discord is, how do you invalidate it too? Because I have this before, I have all this analysis before the market opens. How do I switch that bias if the market opens and it say I'm wrong? So basically what I do is, like I just said, I'm looking here to go down, looking here, go down, looking here, and then go down. But what if it just keeps going up? Well, for me, it's simple. For me, it is very simple at that point. I do nothing. Why? Because I wait for a setup. So here's what happens. Once on this 15-minute chart, it runs up into any of these places. That's when I drop down to my 1-minute chart and I look for my setup. What's my setup? Well, where it goes up, has a market structure shift, right? Market structure shift, fair value gap, goes back up into the fair value gap, and then continues down. That's my setup. If it goes up here and it never gives me that setup, I don't take a trade. If it goes up here, never comes down and gives me that setup, I don't take a trade. If it sweeps up here and if it never comes down and gives me that setup, I don't take a trade. If it just keeps running up, then I don't take a trade, because my analysis. Now you could say, well, you can wait until it runs up into this fair value gap and see if it gives a short. You could. Or if it takes these highs, see if it gives a short. You could. But the reason why I'm not going to go long here is because everything looked like it was going to go short. And if I go long, first of all, I have to have a target. So I could go long and I could just target like a fair value gap up here. But here's why I don't. Because if I take a trade long, I shift my mind, my bias, and I say, oh, well, no, I'm wrong. It's going up. It's just going to keep going. And I go long, right? Let's say I enter long here. And let's say it's going, and then all of a sudden, wham, it stops me out, and then it continues down. That's where I can spiral out of control. Say, dang, I was looking for a short. I was waiting for a short. And I just took a long. Why did I take a long? That's so stupid. So my mindset is I'd rather do nothing, right? I'd rather do nothing and have a 0 day than take the risk of taking a long against my bias here. Because here's what happens. It could win. It can hit your target. You can win. And you're like, oh, you feel good. But I always think of, here's the thing I say. I tell myself, if I take this trade and it loses, how will it make me feel? That's a great question you can ask yourself. If I take this trade and it loses, how will it make me feel? If it'll make you feel like crap, then probably don't take it. All right, but we're about to get to some better stuff here. All right, so hang in here. Hang in here. We're about to get to some better stuff. So that's what I'm looking at. Okay? So I'm looking and I'm waiting for that. Now, here's the magic, where you're going to combine the 15-minute chart here with the daily. This is how you're going to pair it right here. Here's the golden rule. Here's the secret sauce for this video. All right, we're going to mark and find the midnight opening price. Okay, right here, 0000. It's an up close candle, so I'm going to put it down here. Here's my midnight opening price. Right there. I actually have it as a template. Midnight opening price. Boom. You can also, I also do look at the 8:30 opening price. I mark it because when we open at 9:30, I do like to see us shoot up above that. But here's the thing. Here's what you look at. Actually, this one's irrelevant for today. So let's do this. Here's the midnight opening price. Right here. After the market opened, after this midnight opening price, did the market stay above it or below it? Above. You can see here, the market stayed above the midnight opening price. So go back to the power of three I talked about. If I'm expecting a bearish candle, how does that candle work? You're going to have an open, right? And you will have a high. So if you're expecting a bearish candle, you're going to have an open, you're going to have a high. And then it's going to displace down or distribute down to make a low somewhere. And then it'll come back up and make its close. That's just how the candles are formed, right? So if the whole time after midnight, we're above the midnight open, that's another indicator that it's aligned with my bias because I'm expecting a down close candle. So if I'm expecting that and the whole time we've been above the midnight open, that's perfect because then I want to sell in a premium to take it down to a discount. Okay, now I don't hold my trades that long, but I'm aligned with the bias if I do it this way. So here we go. So you'll see I can fast forward this a little bit. And another thing. So here's another key thing, another golden nugget here, okay? You can expect however far price traveled above that open, right? Above the highest point, you can expect 2x to deliver below. That's the rule. That's the golden rule. Okay? So let's measure that. Or actually, let's fast forward and see the high. Let's see what happened here. This 15-minute, boom, we went up. And look, right here, this 9:30 candle, look how we shot up right into there. Okay? That's just beautiful. Shot up right into there, and look at that displacement down. But here's the thing. I'm not thinking we're just going to sweep the London low. I'm not thinking we're just going to take the Asia low. No. Because of everything I just said on the daily chart. On the daily chart, I think we're going to go below the midnight opening price. We're going to run down and take previous day low. I want to see the sensitivity as it does come down to these upper wick, premium wicks, right? Midpoint, lower. So as long as it comes through it and then through here, we're going to go down and hit that volume balance. We're going to keep going down and hitting that daily fair value gap. It's just going to happen. It's going to happen. Okay? So that's what I was looking at. So let's do this. Let me show you this piece here. That other little golden nugget here. We'll take the midnight opening price, and this was the highest point that it made right here. 76 points. Let's double that. This is good stuff right here. Watch. You can't make this up. 76 times 2. It's 152 points. So now let's measure out 152 points from that high. If you don't know this, you're about to get your mind blown. What'd I say? 152 points. 152 points is right here. That's 761.50. Okay. 761.50. Now, here we go. Let's measure that. Because if you zoom out, what do you have here? If you zoom out on this 15-minute, you have a nice little market maker, buy model. Coming down, market maker, sell model. Okay, I'm trying to write it sideways. And then, watch this. Watch this. It all lines up, I'm telling you. Before I go into the next part that I'm going to go to, let's take this high. Let's take this low. Put a range on it. Equilibrium right here. Went right back up into equilibrium. So now you have, like I said, a market maker buy model into a market maker sell model. Pullback retracement into 50% equilibrium of this dealing range. Okay. Now, let's check that out. Are we going to continue now after this pullback, go into another market maker sell model? Well, let's see. I have this 152 points down to, what I say? 6150, I think is what it was. So, okay, let's measure this out. This high, right down to here, 6150. Let's put that range on it. Okay, let's get rid of this so we can see a little better. Let's get rid of this one. Now, where's equilibrium of that range? Right here. Well, you kind of can't see it because my midnight opening price is covering it, because my midnight opening price is this blue line. My equilibrium is this purple line. You can't see it. Why? Because they're the exact same level. The exact same level. So typically what you have when you have a range or when you have an expected move, typically in the middle of that, you're going to get a fair value gap somewhere, and that's called a measuring gap. Measuring gap. So let's just fast forward here. What do we have? I mean, do we have... Yeah, I kept going. But do we have where you could have anticipated a fair value gap right at about that 50% mark? Because, yeah, I went further. But you can anticipate that 2x move. It went up that amount, 2x lower. And 2x lower was this level. Here's equilibrium. There's a measuring gap. So you can say with high confidence, it's going to come back up into this gap and continue. If it hasn't hit down here, which it didn't, it came there, hit this gap and continue down. You can't make that up. You can't make this stuff up. I'm telling you, you just can't. So look how it just all lines up. And then of course it just kept going down. So it all lines up perfectly. So now let's drop, let me back up and let's drop down to my 1 minute, because I want to show you at the open how that looked, and then I'm going to take you into my trade, and then then we'll be good from there. So, I mean, it's just beautiful. So now let's go to the 1 minute. And look, don't get too concerned with, oh man, like he's good, or how I'm never going to be able to see all this. Don't get overly concerned with that. I've done a lot of studies. I've done a lot of fine tuning. This is what you got to do. As long as you put in the work, you will learn this stuff. It's not rocket science. It can sound like it. It can sound overcomplicated to some people, but to me, it's worth it because I know why. It helps my emotional state, my mental capital. It just, to me, it's just amazing. Okay. So now let's fast forward. Okay, we don't have the open yet. Well, let's get to the open. Let's keep going. All right, so look. So here we shot up at the open, right? 9:30, boom, shot up, came right down. That's all I needed. And I can take a trade. See, this is where some people will say, if you go short here, oh, you're shorting the bottom. No, I'm not. We're nowhere near the bottom. It's because they're looking at traditional, support and resistance. And they're like, oh, that's the bottom. You're shorting the bottom. No, I'm not. There's framework telling me we're going to go much lower. All right. So it's not shorting the bottom. So now I'm waiting, and I want to see, because we have multiple fair value gaps here, right? I want to see, I'm looking originally at this as potentially the first presented fair value gap. And the reason why is because if you take this little range that it creates here, right, from that high to that low, now I take this and I want to measure it and see how it lines up with equilibrium, the 70.5% OTE, and the 78% mark right here on the fib. So when I measured this, I was like, well, look at that. OTE, 70.5%, optimal trade entry, lines up perfectly with this. So this could be the first presented fair value gap. Could be. Otherwise, you know, this would technically be the first presented fair value gap right here. So I'm just watching. But I want to see, and then of course we're going to get one here. So I'm like, where do we start accumulate? Where do we hit? Where does it respect? I want to see that. And it hits that one. And I'm like, okay, I want to see it didn't pull back up there. All right. It's showing me that it does want to continue down lower. Then it creates this little one, shoots up, and I want to see where does it start accumulating. And I'm like, okay, it's not going to go higher. It's going to accumulate in this area, and it shouldn't go back higher above this. It just shouldn't. And then it's going to continue down. So, and that's exactly what happened. But let's pull up my actual trade here. My recording of my trade, and this is where it is. This is where it looks. So I'm going to hit the play button. And I'm going to go short in here. I'm like, okay, I want to see it. Yep, I'm going to go short. This should not come up. So I go short. We're going to fast forward because it stayed. And I'm watching. I'm like, okay, it's accumulating. I want to put my stop above that fair value gap up here because I have to allow myself, allow price to trade up in here. I have to, okay? So then I see, okay, it's continuing to, you know, accumulate in this area. Perfect. It's not going to... So like this is where you can add into your trade if you want, but you know it's not my style. It's not what I do. So I just hold, and I'm aiming. So if you look, I'm aiming for previous day low here. I do believe it's going to go further, but I'm aiming my stop right above previous day low. But I'm watching this right here because I want to see the sensitivity when it hits this. If it bounces off it, I might close. If it goes through it and overshoots previous day low, then of course that's my target and I'll be out then. So I'm watching that. So let's fast forward it because this does take a little bit of time because it was pretty early when I got in, but then the 950 macro does deliver lower. As you can see, it's just going. And then it starts just really picking up. And once it takes Asia low, it starts getting down here. Then I move to break even just to cover to make sure, because the last thing I want is, you know, to be wrong that it doesn't go all the way down here. And it took maybe all it wanted to do was take this sell side, and then it comes all the way back up and I lose. Because again, nothing's guaranteed. So you got to manage your risk, right? You got to manage your risk. Comes down. I see this fair value gap form, and then I go ahead and move my stop. So there we go, move my stop. Coming down. And I see I'm watching the sensitivity right here. I'm like, okay, we're close. We hit it. Let's see. Are we going to stop? I'm like, okay, we didn't just go straight through and keep going. Like, we didn't just keep going. So at that point, I'm like, yeah, we could retrace back up into this fair value gap. I don't want to do that. Let's call it. We're close enough. Done for the day. That's it. So I hope you got some nuggets out of this one, because I think that I dropped some nuggets on this one. And yeah, I hope it helps you. And as always, I'll see you on the next one. Trade well, everybody. Take care.